Right. Well, it's right about that time. So to be respectful of everyone's time, we're going to go ahead and get started. Thank you for joining us for the Show Me the Money Down Payment Programs webinar hosted by Homeownership OC and our partners Wells Fargo. We're going to go ahead and get started, and we're actually recording this tonight so that if you do miss parts of it, we're going to post it on our website so that you're able to go back to it and reference it if you need it. So let me go ahead and start with introducing myself. So I'm Connie Dertarosian, Executive Director for Homeownership OC. Also a HUD certified housing counselor and have over 25 years experience in the housing counseling industry. And tonight we've got a couple of other presenters with me, some great experts in the field that are going to be talking about different programs. And so Helen, if you're available, go ahead and introduce yourself.
Hi, this is Helen Tran. I'm a certified housing counselor, and I'm with the Homeownership OC, and I provide the education and counseling for first-time home buyer. Yes.
Thank you, Helen. And she's an expert. She's an expert in this field, so she's got a lot of great information. All right, and Brian, we have Brian Howie. He's from Wells Fargo, and he also is an expert in his field. So Brian, if you wanted to introduce yourself.
Yes, thank you guys. And good evening, everyone. My name is Brian Howie. I'm with Wells Fargo Home Mortgage. I'm one of many of their community mortgage bank sales consultants here in Orange County. We have our corporate mortgage center in Irvine off Main Street in MacArthur. And I have the opportunity to serve the two local bank branches in Anaheim. Along with being a community mortgage bank consultant, I also serve on Wells Fargo Military Lending Board. So if there are any veterans or any family members of veterans and you have any questions about VA loans, I can also address those being part of the VA military team for Wells Fargo.
Excellent. And you're going to be hearing a little bit more from Brian. He's going to be going over some great programs that they have and down payment assistance and grants and all of that a little bit later. So I'm going to give you a little bit of an overview of what we're going to be going over, a variety of down payment assistance programs and grants that are available, different loan programs, as well as how to work with a HUD housing counselor to ensure your success. And then we'll talk about homebuyer education and the nonprofit resources that are available to assist you on your way to homeownership. So Homeownership OC is a nonprofit HUD-approved housing counseling agency, and our mission is to promote and preserve the dream of homeownership through outreach, education, counseling, and financing. We're started in 2007, and we've done hundreds of these workshops and helped thousands and thousands of individuals with rental issues, credit issues, home buying, of course, down payment assistance, and foreclosure prevention counseling as well. If you are interested in signing up for one-on-one counseling, we do that. And you can sign up at our website at homeownershipoc.org, or you can scan that QR code there to get there quickly. And we can do one-on-one education to help you if you need some credit improvement or just want to see where you're at in the home buying process. So tonight we're going to be talking about different down payment assistance programs, grants, loan programs. So these are generally designed for first-time buyers and borrowers who need a lower down payment options and borrowers with less than perfect credit or who need a little bit lower credit options. So we're going to be talking about the different programs that can help you, because I would say that's probably one of the biggest hurdles that people have is, where do I come up with that down payment, right? So we're going to tell you some of these programs that can help you offset some of those costs and help you with some different loan programs. And I'm going to bring in Helen to start with our community lending programs, as well as FHA and VA. So Helen, you'd like to take it away?
Yes. Let me go into the screen.
Can you see okay?
No, I don't see the screen. Can you share it with me?
Oh, can you all see the screen? Because it says
I don't
I'm
see the
sharing.
PowerPoint.
You
I
don't
don't
see the
see the PowerPoint.
PowerPoint? No?
No.
Oh, Brian, can you
Oh,
see
now
it?
I can see it. Thank
Oh,
you,
okay,
Connie.
okay. I'm like, well, that won't be good if you can't see it. Maybe it was your view.
Oh, okay.
Okay.
I'm sorry.
Oh, no worries.
And yes, hello, this is Helen Tran. I'm hot certified housing counselor. I work as a counselor for almost I would say that for 16 years, almost 17 years. And I have seen a lot of down payment assistance that help the first time home buyer. If you qualify, you're eligible to apply for it, then you should. Today, I'm going to talk a few programs that are available. It's called Conventional Community Lending Program. And then I will talk about FHA and VA mortgage. Conventional Community Lending Program provide low down payment program. For example, Bank of America offers $7,500 in closing costs and $10,000 in down payment assistance. Wells Fargo offer 5,000 grant, and BMO offer 16,000 grant, and City National Bank offer $20,000 is for closing cost assistance. You can use the grant to buy down the interest rate or use for closing costs. And for some reason, some client they didn't have the credit history. We can use the alternative credit evaluation, allow for borrow with limit or no credit history. We can use your rent history, your car insurance payment history, or your cell phone payment history. We can use that. And the first time buyer get the benefit that the lender they very flexibility on ratio, debt to income ratio, depend on the program too. And with FHA and VA mortgage, I would let Wells Fargo talk about VA because he's the expert. But with FHA, I can talk about FHA a little bit. Is the minimal down payment required, and the FHA only require 3.5%. And usually the program for people that with the debt to income ratio is high, like 55%, 50 to 55%. And they didn't have any saving, they didn't have any credit. And that's how FHA is. And you have to pay the PMI, the private mortgage insurance. The good thing about FHA program is you can combine with another down payment assistance program called WISH. It's $29,000. It's forgiven after 5 years. You have to live in the home for 5 years in order for them to forgive. This is the only down payment assistance program that can combine with FHA. Okay, next slide, please. Let me see. Next slide. Yes. Continue on community assistance program. Fund assist with down payment or closing cost. You can use it the grant. Remember, fund you have to pay it back, but grant it means forgiven. It's free at a certain time, usually 5 years. And fund sometimes they defer, and sometimes they defer for 15 years. Sometimes they defer for 40 years or 45 years, depend on the program. You can use the grants for the down payment or the closing cost. There's a program that provided by federal, state, or local government agency or nonprofit. Repayment may be required on second loan. It means always the down payment, always on the second loan. The primary loan, we call it first loan, is provided by the lender. So sometimes the second loan, it means they call silent second loan. It means you don't have to pay it back right away. Like for example, some of the program they forgiven, it's just a second silent forgiven. So every year they forgive a certain amount of the grant. And or the second loan silent can be a deferral. It means that they stay in the loan for 45 years. You don't have to pay it back unless you sell it or refinance. Then you have to pay it back. With one program, you have to pay back with interest rate. 3%. Other program, they say no interest, just pay them back. Now I'm going to talk to the other down payment assistance program provided by the cities. City of Santa Ana provide $120,000. It's deferred for 45 years. You don't have to pay back after you pay off the first mortgage, and then you have another 15 years. So total 45 years with no interest. You pay it back, 120,000, 45 years later with no interest. But if you decide to sell the house or refinance with no cash back, it means that you refinance for the lower interest rate. You know that interest rate right now about like 6.25 or 7.25. So when the interest rate go down, you want to refinance to lower the interest rate. It's okay. The city will ask you. They have to approve you for you to refinance. Or sometime with no cash out, you can talk to the lender that, oh, I just refinance for the low interest rate. I will not ask for the cash out. Can you keep the defer 120,000 for 45 years? Sometime the city will do special exception for you. So you need to talk to the city of Santa Ana in the future. If you apply and buy in Santa Ana and you decide to, in the 5 or 10 years, the interest rate go down, you want to refinance with no cash out, then you need to talk to the city and negotiate with them. This is a very popular program right now, City of Santa Ana. And in July, they will have more money, and maybe they increase the down payment assistance program, not 120,000, maybe they increase more. But in July, we will know more about this program. And the special about City of Santa Ana, you have to do the home inspection. Then you submit that home inspection report to the city, and 2 weeks later, the city will come out to do a second home inspection. Why they have to do that? They want to make sure that everything correctly checked based on the first home inspection report. They want everything matched, nothing that didn't match with the home inspection report. They want to make sure to protect you at the home, the first-time home buyer. They want to protect you, live in a good condition, the home with a good condition. So that I want to share with you a little bit about City of Santa Ana. If you apply for it, let me know so I can guide you more. And City of Garden Grove, 110,000. The requirement from the city a little bit different too. You have to get a pre-approval from the city first before you work with your lender and before you work with realtor. So get the approval from the city of Garden Grove, then you can do the shopping with the lender and realtor. That's a little bit different. And City of Santa Ana, you have to be in escrow to apply for the program. But City of Garden Grove, you have to apply for the program first before you work with lender or the realtor. And City of Chino, they have 60,000 from the city. They still open right now. And City of Menifee is $100,000 is interest-free, 15-year deferral loan. So it means that 15 years, you live in the home, 15 years later, you have to pay it back with $100,000 with no interest rate. And if you move or sell, transfer, refi, you have to pay it back. So that's a requirement from the city of Menifee. And if you want to know more information, you can go into the city of Menifee and check it out. And $101,000, $166 from the county or San Diego. So if you want to know more, if you want to buy in San Diego, let me know so I can give you the more information. Next slide, please. Okay. Closing cost assistance. Their lender provide closing cost assistance program to help first-time buyer buy a home. You can use that grant toward closing cost for qualified buyer. May eliminate upfront closing cost. Yeah, it's help you with the closing cost, but they still want you to contribute at least 1% to 3% of your own fund for the closing cost. So it means that if they approve you for the purchase price of 500,000, you must have at least 15,000 in your old saving account. Must be saving, not checking. Make sure you have a saving account separate with the checking account. No repayment required. Yes, it's forgiven, so it's free. You don't have to pay back. You can be combined with other community lending program. Yes. But with the city of Gandro, different. They can combine with the closing cost assistance from the lender. They just want their program, 110,000. So if you want to know more about the city San Gandro program, let me know so I can provide you the guideline and the way they approve for the loan. And next slide, please. Do you have to attend the home buyer education class and get a certificate to qualify for the down payment assistance program? Yes. And the best thing is homeownership OC provide home buyer education class free. So take advantage of it, register online and attend the class and earn the certificate. It's free. We're the only agency that providing home buyer education class free. And take advantage. Usually it costs you money, but we decide that provide free to the first-time home buyer. Yes, you have to attend the home buyer workshop. Which program I mentioned about which program is up to $29,000. You must be a first-time buyer, 4 to 1 match. It means that every $4 you save, every $4 you save, the program will provide you $1. This program provided by Federal Home Loan Bank in San Francisco. It's been in the community for 20 years something already. And if you have to have a saving that to match with the program, like I said, 3%, at least 3%. And then they will, if you qualify, they will provide the grant to you. If you don't have the saving account of 3%, they will ask you to continue with the saving. It cannot be gift. The saving have to be come from you. You have to contribute from your account, and they will look at your bank statement to see how you save the money. Can be gift, cannot from the relative. Down payment is different. The relative and the gift from the parent can be used for the down payment is different. And the 29,000 you can use for down payment and closing cost, either the choice. First mortgage would approve lender only. Yes, you have to apply with the first mortgage with the lender that accept the WISH program, that pair with the WISH program. Yes, to get the approval. Always get the approval from the first mortgage. Yes. Middle income down payment assistance program. This program is very popular for people making income above 80% AMI. This also provided by Federal Home Loan Bank, San Francisco. The program is kind of new. It's only about 3 years old. And it's ran out fast. The money ran out very fast. Yes. You have to contribute a minimum of $10,000 from your own fund. That's the requirement. It's free. If you qualify, it will be $50,000 forgiven after 5 years, just like WISH. WISH is for people making 80% AMI and under it. But middle income is for people making above 80% AMI, they make more money. So there's a program for the people make a higher income. And it's $50,000. It's forgiven after 5 years. And you can use either for down payment or closing costs. Is income guideline? Yes, you have to eligible for the meet the income guideline, attend the home buy workshop, and attend the one-on-one counseling section with the HUD certified housing counselor. Yes. OCMAP program. This program is provided by the County of Orange. The requirement a little bit strict, but people still buying it. This program you can combine with WISH program. You can combine WISH program of 29,000. So OCMAP program is $80,000 and it's deferred for 30 years. This program you have to pay it back when you refinance or sell the house, or after 30 years you have to pay it back 80,000, include the 3% simple interest. This program for first-time buyer, it will be a second silent mortgage with simple interest payment defer. You must qualify for obtain to first mortgage loan from a participant lender. It means that you have to get the pre-approval from the first mortgage with the MAP approval lender. They have the list of several lenders that work with MAP program only. And available for property in Orange County unincorporated area or in the city of Brea, Cypress, Dana Point, La Palma, Laguna Beach, Laguna Hill, Laguna Wood, or Los Alamitos, Silver Stanton, and Villa Park. These are the incorporated area that qualify for the MAP program. And you can see that on the slide, there's an eligible area you can buy. You can buy in those city only. It's required home buyer education and family income limits apply. How do you know if you qualify to apply for the program? You can schedule a one-on-one with us. So then we can do the calculation and determine if you qualify eligible to apply for the program or not. Yes. You can combine this program with WESH.
Excellent. Thank you, Helen. So we had some great information from Helen, and now I'm going to ask Brian to join us. He's going to talk about some programs that Wells Fargo has, the Dream Plan Home program, closing costs credit.
And the Union Plus. So
And
good
the
evening,
Union
everyone.
Plus.
And the Union Plus. So which is one of my favorites. So hello, everybody again. I've seen a couple more people have added since our introduction. So I just wanted to kind of do a quick introduction again of who I am. My name is Brian Howie. I'm with Wells Fargo Home Mortgage. I've been now with Wells Fargo for 14 years here in Southern California. I grew up in OC and Fullerton, La Habra, kind of all over Downey as well. So I know the LA market really well, just as well. Our corporate branch that I am based out of is in Irvine, California. And like I said before, I'm lucky enough to have 2 retail bank branches here in Anaheim. So I'm always blessed to be on these. My title, as you can see, says Community Mortgage Bank Sales Consultant. And a lot of people are like, hey, that's a long title. What does that mean? Right. So I always kind of bring it up because Wells Fargo is a community bank. And what that means is we want to be out in the community. And one of my favorite things about my job, my career, and being a loan officer at Wells Fargo is that I get to educate homeowners on the programs that we have. And yes, tonight I am going to talk about just Wells Fargo programs. But as you can see on those slides that Helen was going over, I'm here more at the end for a question and answer too, because even if you don't choose Wells Fargo as your lender of choice, which I hope you do, but I'm here to educate you on what's available in the market for home ownership. Because as you can turn on the news every day and they talk about rates and they talk about this, you can kind of see that programs change, from down payments change, loan amounts change. And a lot of it is all driven by different counties, right, with the different loan amounts and such. So I'm just here as a lender with the experience and the knowledge that I have after 23 years to really answer any questions and even talk to you after this meeting. All my information will be up. We do phone consultations all the time. We can always meet. I do actually have access to any local bank branch. So Huntington Beach, Irvine, wherever you're located, I can always come to you at a local branch and discuss any further opportunities that you may have. So without further ado about myself, I'll jump in next to Wells Fargo's program. We call this our Dream Plan Home, okay? And this program does actually consist of 2 different parts. The first one is for the Dream Home Plan Mortgage, which is our first-time home buying program. And what's really cool about this that kind of sets us aside from other lenders as well is that even though this falls under our first-time home buying program, if you've actually purchased a home in the past and a current homeowner and you are purchasing a new primary residence, you can use this program again. There is no waiting period. A lot of the other lenders, and I know with the counties, if you are getting down payment assistance, it requires that you are not on title or that you haven't purchased a home in the last 3 years. Our program does not do that. As long as you're purchasing a primary residence, you can take advantage of our minimum down payment of only 3%. As you can see on the slide here, it does say it is a minimum down payment of 3%. In Orange County and LA County, that is up to a loan amount of $766,500, which is the county loan limits for a conventional loan. Now, LA and Orange County does have a high balance loan limit, if you guys have ever heard that in the past, which they do allow on a conventional loan through Fannie Mae and Freddie Mac, that you can go up to $1,089,300. Now, with that, we do offer this program for that, but that does require a 5% down payment. And again, this can be used for a primary residence purchase or a refinance if you are a current homeowner and you're trying to refinance. The types of loan programs that we have on this is a conventional fixed rate mortgage and the conventional conforming high balance loan amounts. Those are the loan amounts I just discussed. We do not allow this program on any adjustable rate mortgage currently. When it comes to guidelines, we have very, very flexible guidelines. Just like Helen was saying as well, a lot of these programs that we do, we piggyback, or what we say layer, with some of the down payment assistance programs as well. So we do have flexible guidelines for the limited credit history or less than perfect credit. And these programs can be combined with gift funds. So again, unlike just some of the other ones that require you to bring in some of your own money as a down payment, we allow 100% of the 3% or 5%, depending on the loan amount, be either gift funds, or it can be used with one of the down payment assistance programs that were talked about in the past, or any other ones if you're looking in a different city, or the state of California also has down payment assistance. With this loan, you'll have a good old-fashioned 30-year fixed rate mortgage. It does have mortgage insurance. Mortgage insurance is required by all lenders, that if you do not put 20% down on the loan, that is incorporated in your payment along with your taxes and insurance. As we go down, it says, talk to me about a loan amount, types of loan, property, income, first-time home buyers. I think I touched base on all that because it is a first-time home buyer program, but you can have a home currently and look to purchase another new home. We do require, just like Helen was saying on those down payment assistance programs through the other cities, this program through ourselves does have a home education requirement for your eligibility, and it is free from Wells Fargo as well. So once you get pre-approved, if you're looking for a house, or the next step would be a full pre-approval. At that time, we can send you the home buying education requirements, and you can get that done. Next slide, please. Our home mortgage consultants, of course, anyone at Wells Fargo can help you with this program. We're all certified to do our Dream Plan home mortgage. If you know a local lender already or a local mortgage representative through Wells Fargo, you can. Again, I've talked about all these recently, which is the loan amounts, properties, or loan types, property types. The good thing about the property types I haven't mentioned from the other side is that this is for a single family residence, 1 to 4 units. So I know kind of a popular thing right now, people buying duplexes or even 4 units, occupying one, because it does have to be a primary residence. So even if you bought a 4-unit property, you could rent out 3 of the other units, as long as you and your family or yourself was going to occupy one of them as your primary residence. When you do get over 1 single family residence, which is a single family or a condo, once you go from 2 to 4 units, it does require 5% down, not the 3%. And again, that is up to the loan amount of $766,550. If you go to the high balance area, I would kind of talk to you off record, because as you go into 2 units, then you can go up to a little over 900,000. As you get up to 3 units, you can go over $1 million. As you go up to 4 units, that conventional loan amount is like 1.15. So it does depend how many different units it has is going to determine the loan amount at that time. Next slide. Now, with the Dream Plan Home Plan Mortgage, this is actually a separate part of it. And this is only for certain areas. And this is an income-driven program. Wells Fargo does qualify or does have a program that we will give up to $5,000 for a one-time closing cost. You can use that closing cost credit for the appraisal fee, processing fee, any non-reoccurring closing costs, points, title and escrow fees that are charged in loans. Now, for the closing cost credit, unlike the other program, this is only on purchasing a primary residence. It's still it's a single family or 4 units, but we do not do the $5,000 closing cost credit if you were going to refinance. Like I said, this is a income-driven program. So it's consumers with income at or below 80% of the area median income. And that's depending on where you purchased your home at. With this $5,000 credit, you can use this on any conforming loan and any VA program as well. So if you are a veteran and you're taking advantage of your VA loan, you can get that credit up to $5,000. Okay. Next slide, please. So this program, like I mentioned, it can be used combined with any low down payment options. So we do allow the gift funds on it. Any Wells Fargo approved down payment assistance programs. Those are all the ones that Helen spoke to you about earlier here that are local. But again, one of the great programs are CalHFA, which is the down payment through the state of California. We do allow that on that program as well. And we do have some special programs for first-time home buyers, union members, any type of employees of Wells Fargo, service members, and our veterans. Next slide, please. So we allow the Dream Plan nationwide on any loan if you're putting the 3% down. When it comes to the closing cost credit, these are the areas, and I'm only going to talk about California tonight, but in California, the closing cost credit is only eligible in these counties and in these markets right now. Now, the good part about that is these requirements or these counties and these cities that you're purchasing in, we add to these like every single month. So even last month when we did this home buying seminar at the Santa Ana train station, we didn't have Anaheim on there yet. I'm really happy for it because I serve a lot of the community of Anaheim, having 2 local bank branches there. But in California and our surrounding cities, we allow it in Anaheim, the city of Santa Ana, Irvine, California Metro Division. If you're looking in Los Angeles, it's the city of Los Angeles, Long Beach, Glendale. If you're looking up north, Oakland, Fremont, and Berkeley. If you're looking in Riverside or San Bernardino, Ontario. And as you can see, I won't read every single one verbatim if it's too small, but you can see where we're doing the closing cost credit for Wells Fargo right now and in these cities. And then Connie, you can kind of go through the next 2 slides because those are the East Coast. So I'll kind of take a quick little break real fast. If anyone has a question in regards to the Dream Plan Home Plan, you guys can write it in your text in the text box right now in regards to the closing cost credit or the program itself. Well, I don't see
no questions
yeah,
so far.
No typing. And we'll do a and we'll do a Q&A at the end too. I'm sure you guys are just listening to all this, absorbing it right now. I know it is a lot of information as well. But again, that's what we're here for, is just to make sure that everybody is educated of what is out in the community right now. The next program that Wells Fargo that I'm going to talk about, and I'll be honest, this is the one that we put on all our slides. If it wasn't a first-time home buying, if you were buying multi-million-dollar homes, everything, we always bring up this slide, which is our Union Plus mortgage. I want to say, me working at Wells Fargo for the last 14 years, I remember when this program came out. And it's probably one of the most exciting programs that we have because it offers a lot for union members. Now, if you're not a union member, I just want you to still listen to it. But I just kind of want to take you through because, you know, you can have a life change and switch employers and become a union member. And you get a lot of benefits when you're a union member. But I'll jump into the program on what it is. So what a Union Plus Mortgage is, it's an exclusive program designed for union members and their families. And I'm proud to say that Wells Fargo Home Mortgage is the national lender of choice that is endorsed by AFL-CIO. That's the national insurance company to over 30,000 local and international unions. They've chosen Wells Fargo to be their lender of choice for all their union members. I'm going to kind of bounce around on the screen if you see it on the bottom, or if you can read it. I know it's a little small, but I'll talk about before the overview, Union Plus Mortgage Program, the specific nuisances. So it is used for active and retired union members and their immediate family members, which are spouses, domestic partners, parents, children, and stepchildren. The best benefit that I would say that the program has, and I have seen this a lot during the COVID times, of course, when a lot of people went on strike. Well, they didn't go on strike. They, you know, their companies got shut down. They got laid off. But Union Plus provides a mortgage benefit as long as your mortgage is with Wells Fargo. In the event of a layoff, a strike, or even disability, is that you can apply through your union for mortgage benefits. You can get a loan or you can get a grant up to $16,000 or 6 months of mortgage payments to continue to make your mortgage payment. There's also a hospital grant. If you become hospitalized, you can get a grant through your union, and that's 3 times per your lifetime, and a disaster relief grant as well. If FEMA ever declares that your property is a disaster zone for any reason and you need assistance, you can use that 3 times per lifetime as well. Those are the major benefits that the union provides as long as the mortgage is with Wells Fargo. And as an overview, what Wells Fargo does more as a thank you for choosing Wells Fargo to be the lenders of choice is that on a purchase, we issue you a $500 My Mortgage gift card. This is a merchandising gift card. After your loan closes, we send you a link. It's at participating retailers through one of our online sites. And then you can pick up to $500 in a My Mortgage gift. We do allow this program, of course, on a refinance as well. So if you, again, are a union member or qualify or a family member of a union member and you refinance a mortgage, you get actually a $300 My Mortgage gift card. Next slide, please. And then the last part of the Union Plus, which I'm happy to talk about, is the veteran grant provided by Union Plus. So Union Plus, again, which is distributed from AFL-CIO, which is the national insurance company, to your union, if you are a union member that participates, is if you're a veteran and you purchase a home, as well as you're getting a $500 gift card from Wells Fargo as a thank you, you can apply as long as you're purchasing a primary residence through the program, and you can get a $1,000 grant from Union Plus. That application must be submitted 90 days after you close. Of course, I would help you with all the paperwork and all that, and you would submit that through the Union Plus, and you would be eligible for that grant through the Union Plus program. So that kind of shakes me up and ends my presentation. So if anyone, again, has any questions, I'm here to answer anything that you may be on your mind about any of the programs that we discussed or anything in general about homeownership.
All right, excellent. Thank you, Brian. So we had some really great information about some different programs that are available. And if you guys do have any questions, feel free to put them in the chat box. We'll be happy to answer them. We're in the home stretch now of our presentation. So thank you again, Brian. He'll be here and Helen will be here as well for different questions that you might have if anything pops in your mind. So a lot of times clients come to us and they're like, well, how do I even find these programs if it's something I'm looking for something in a different city? So you can always go to the city websites or the county websites. Like Brian mentioned, CalHFA is our state housing finance agency. They have down payment assistance. Or through eHome, there's a down payment resource that you can go to as well. You can type in kind of the zip code that you're looking for. It will pop up and tell you a little bit about some of the different down payment programs that are available. But you can also talk to your housing counselor and lender because as you can see, there's a lot of different programs out there and there's a lot of different eligibility requirements. Some require income guidelines, some require geographical guidelines. So it just depends. So there's the good news is there's lots of opportunity for you to get into homeownership. You just have to take that first step, right? So, of course, like Brian said, there's a lot of, negative stuff. We hear about it, but I can assure you, and Helen will tell you, we have lots of people who are purchasing homes right now, right? Because rents are expensive. And if we can make it work, and we can maybe use some of those funds that you have to buy down the rate or some of the down payment programs to help you with the down payment part of things. We want to put it together so that we can make homeownership a reality, or maybe it's 6 months from now or when you're ready. But I encourage you to contact us, meet with our housing counselor to find out where are you at in the process and what hurdles you need to get over, if there are any hurdles. So you just know where you're at. We can help you if you do have credit issues, we can help you overcome those. Or maybe if you just need some motivation to pay off some of those debts. And that's what I would say. One of the biggest things that we tell our clients is pay down those credit cards, pay off your car note, so that you have more money available to be able to purchase, right? So if you don't have those regular payments, it's going to be more easier for you to qualify for that mortgage. And take the home buyer education class. We get grants from many of our partners so that we could continue to offer it free to you all. So it's a free course. You can take it online. You get a certificate, and it is required for most all of the down payment assistance programs. So if you have questions about the process, we're here to help you. As I said, majority of those programs are going to require you to take that class. So we're happy to provide that to you. We're also here to provide the one-on-one counseling if you need that as well. And we can go over your personal situation so that we can, help you overcome whatever those hurdles are. Even if you've had issues in the past, we've seen many of our clients overcome their credit issues to get back on track, start saving, and we have a lot of success stories of folks who were able to purchase. So you can go to our website, homeownershipoc.org, to our events page. We offer home buyer education. We also offer a credit boosting class, and we do offer the homebuyer education in English, Spanish, Vietnamese, and Arabic. So we're trying to offer it in different languages if you know of folks that need that. And again, free homebuyer education. It's a valuable tool that's going to go over the whole home buying process and make sure that you understand that whole transaction. So now's the time when you can ask us some questions. And I think a couple of them have come up. Let's see, we've got one. Can you please send us the list of maximum purchase price in San Diego for 1 to 4 units? So I don't know if Brian has that off the top of his head, but I'm sure he can look it up. So we could certainly send you that information. Brian, do you happen to know?
I was looking, I don't see the questions. What was the question again?
Can you, what's the maximum purchase price in San Diego for 1 to 4 units?
Oh yeah, I have that right at the fingertips. So give me
Okay.
about 10 more seconds.
Okay, yeah, no worries. Okay, good. Well, you got the answer to the question. That's the most important part. So If you have specific questions, you have my contact information here or Helen's contact information, and we can certainly get the answer for you.
Yeah, so
Another-
I have it
Okay.
right here.
Okay.
So this is just reading on the list. And a good thing, I mean, just so you know, I'm going to read it to you, but you can also Google this. Like if you just go to Google and type in Fannie Mae loan limit San Diego County, it will have, it'll probably be the first or second one. It'll have like a spreadsheet and it will take through what what it does. So for a 1 unit, it's $1,602,250 is so when I talk about, it's not the actual purchase price, it's the actual loan amounts that Fannie Mae's looks
Oh, okay.
at. So you would have to put the down payment difference between the purchase price and the loan amounts. So San Diego County 1 unit is $1,602,250. A 2 unit is $1,288,200. A 3 unit is $1,557,150. And if you buy a 4 unit, they allow up to $1,935,150.
Okay.
So again, what's going to happen on that with the purchase price, depending on what lender you use, is where the difference in down payment is going to have to come in. So for an example, on a single family residence, most lenders will only require you to put 3% down up to that loan amount. On a 2 unit, and this is just in general, every time that you add a unit, it's going to change the loan to value limits. So if you do qualify for the first time home buying program, on a 4 unit, you have to put at least 10% down. So that's most lenders, just because it's an additional risk because there's additional units. Different lenders may require 5%. The 3% will go away. I know that because Fannie won't allow that, but it is going to be anywhere from 5 to even some lenders will make you put 20% down on that size loan amount.
Okay, perfect. Thank you. Another question that came in is, can you use some of that down payment assistance to like buy down the rate, or do I have to just use it for the down payment portion?
So as a
Yeah, they can
lender,
use that. Oh, I'm sorry.
Okay,
Oh.
well, we'll let
no,
both of
you
answer.
No.
yeah, well, Helen, I'll let
I
you
forgot.
answer first because you know where the funds are going to get distributed, and I'll explain mine a little bit after you.
You go ahead first, Brian.
Yeah, so I would say 100% you can. So what happens with the down payment, and Helen, you can jump in and correct me if I'm wrong, but I'm just going over,
You are correct.
the
Yeah,
normal
you are
down
correct,
payment
Brian.
assistance
Yeah.
that I've been doing for a while. So for example, say you go to Garden Grove, and we'll just throw Garden Grove because it was up on the screen, right? And you get $100,000. So say you buy a house and it's worth, and I'm just throwing out whole numbers, $800,000, right? So you have the option, because your minimum down payment on an $800,000 house would only be 5%. Okay. That is your minimum down payment per the lender. Okay. So you could take $90,000 of that, apply it to your loan, and then the remaining $10,000, you can use that for your closing cost credit, or you can use that to pay your closing costs. What's going to happen is you're just going to adjust your loan to value, right? Because now you have all this money, you can put 90 or 10% of it down towards that and use the other couple percent for your closing costs.
Okay. Helen, did you want to add anything to that, or?
Oh, Brian will answer everything already. He answered everything correct. Yeah.
Okay.
Yeah.
Another question is, what's the minimum FICO score I need?
So for Helen, so for Wells Fargo or for the down payment through the cities and the counties that.
I guess we can answer for both because it's very
So I'll
vague.
start with mine because it is it a number. So Wells Fargo requires on a Fannie Mae loan that you have a 620 medium credit score. And when I say median, we run all three credit agencies, right? Experian, Equifax, and TransUnion, and the middle score out of those three have to be a 620 or above. And that is for a conventional loan. If you do go and do a FHA loan, I know we talked about FHA, or Helen did as well. Wells Fargo requires a 640 on the FHA program. And it is 620 on our VA program as well.
Okay.
And for the down payment, they require 680. FICO score 680.
Okay. Perfect. And we want you to have the highest score possible, right? That's why you're going to meet with the lender and go over your information, because we want you to, you're going to get the better rate, the better opportunities if you have a higher credit score. All right. So we have another question. What's the income eligibility for self-employment? Can I use the same guideline of 80% AMI or less?
That is correct. Yeah. So, and I'll let Helen talk about the counties and the difference, because they have low income, how many household members. So there's two ways to look at it, right? So when it comes to the down payment, and I'm still looking at just the one of the flyers that I have here recently for like the city of Santa Ana, right? So for one person, low LMI, the low is 88,400. So that does increase it as you have household members. If you have two people living in the household, it's 101. Three people is 113,650. It increases up all the way up to 166,000. So it doesn't matter if you're a W-2 employee or a self-employed yourself. We're going to calculate your income based off the guidelines. So whatever your final income comes out to be is where the maximum income limits are going to affect you. So there's no different income limits, I guess you would say, for self-employed or a W-2 borrower.
Okay. Okay, perfect. All right. Any other last questions before we wrap it up? You guys had some really great questions. Okay, another question. I assume it should be based on 2 years of income. I guess if you're self-employed, I'm saying.
So if you're self-employed, so Fannie and Freddie guidelines does require, well, so yes and no, because what happens is, yes. So the guidelines read any self-employment, you would have to have 2 years of filed tax returns. Okay. Because that's how they're going to, if it's a sole proprietor, they go off your gross minus all your deductions and then what your income is. And then, of course, if you're an S corporation, you pay yourself with a W-2. They use that. Plus, they use what distributions you take. So there's a lot of different ways to look at it. So yes, it is 2 years, but there is an exception to the rule. So the exception to the rule is that if you are less than 2 years, but over 12 months of filed tax returns, as long as you still have been employed by 2 years, but say you went from the same type of W-2 job and you're still doing the same type of business yourself. For an example, I'll just throw an example of a mortgage officer, right? Or a loan officer. I work for Wells Fargo. I'm a W-2 employee. You might meet one that is a broker that works for a real estate company. Most of those individuals, if you work at a broker company, are a 1099 employee. So for an example, if Brian worked at Wells Fargo for 20 years, I always got a W-2. I went to a broker. I've been there only for 12 months. I got a 1099 and I reported it on my sole proprietorship. There is an exception that as long as you stayed in the same line of business, it's less than 2, but more than 12 months.
Okay.
Honey?
Yes,
Can I-
Helen.
Yeah, I'd like to say about the self-employed requirement by the down payment assistance had to be 3 years.
Okay.
And yeah, 3 years we average the net income and we use that for the AMI.
Okay. Okay, see, these are good. These are great questions. Thank you so much, you guys, for being on tonight. And if you do have additional questions, feel free to reach out to us. As I said, if you'd like to take our homebuyer education, feel free to do that. Or do you just want to sign up for one-on-one counseling? We can do that as well, just to see where you're at, or maybe answer your questions specifically. Just go to our website, homeownership OC, homeownershipoc.org, and click on the complete intake form or scan the QR code, and we'll be happy to help you guys out. So I want to thank Brian and Helen. Thank you guys so much for joining us this evening and for your great information. And I want to thank all of you guys for joining us today. We had a great workshop. And if you have any other further questions, feel free to reach out to us. We're happy to help you out. And I do wish you the best of luck on your journey to home ownership. And we're here to help you and here to service you. So thank you, Brian. Thank you, Helen.
Thank
and
you. Thank you, everyone.
Thank you,
Yeah,
guys.
thank you very much. And I was just
Thank
going
you,
to say
Brian.
that too, Connie. So I'm just a phone call away. I know everybody has a unique situation when it comes to income, assets. A lot of people get nervous and don't even, oh, I don't think I qualify. It's a phone call, right? Pick it up. I'd love to talk to you, right? If we can do it, we can do it. And if we can't, we can set you up on a future goal to what we call like my home roadmap to home ownership. Even if we can't do it now, we can put something in place that will show you over the next 12 months, 2 years, 3 years of how to purchase a home.
There you go. All right. Well, thank you guys. We appreciate your participation today, and we'll see you again. All right. Thanks,
Thank you,
everyone.
guys.
Thank you,
Bye-bye.
Brian.
Good night.
Thanks.
Good night.
Bye.